Hello and welcome to the Wendell Effect. This is Brandon Wendell with you, your host. And before we get started, just need to remind everybody we are not registered broker-dealers or investment advisors. We can take a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. They can make personalized recommendations about these markets. There's always risk involved in the markets. All we can do is try to minimize the risk. We can't eliminate it. And past performance, no indication of future results. What else we got there? Also, we are not subject to trading restrictions, so we can have a position in security and issue one at any time. Please stay in touch with me. You can always hit me up at brandonwendell.cmt@gmail.com. You can put in requests of things you'd like me to talk about or things you'd like me to review in this market overview that I do weekly. Go ahead and hit me up at TraderBDub on Twitter and follow me there. Make sure it's the one with the little blue check mark. I'm verified there. Also, don't forget to hit subscribe and like and hit alert so you're notified when the new videos come out. I'm going to be launching some more stuff pretty soon on the educational side as well for you. So, this week is kind of a future special, a little bit shorter video, but we got a special guest that's going to be coming up. So we're going to do futures market analysis this week on the equity index futures. And then I said I'm going to have a special guest that we're going to talk to and kind of find out a little bit more about futures trading through that person. And then we're going to jump into energy futures before we wrap it up. So, starting off, let's jump right in. For the week of January 29th for the equity market indexes, since the market's getting ready to open, I'm actually recording this at the open of the markets of Sunday evening. So, on the weekly chart, you can see we are ready to test our trend line on the S&P. However, the momentum is not very strong. So, any kind of a breakout might be met with some selling pressure. You got to be careful here. Typically, for a good breakout and a change in trend, you want to see that we go above 60, so that way you have plenty of bullish momentum. We don't have that, so this could be a false break. We also have overhead supply at 42.69 to 43.75. That's on the continuous contract. We'll have to see where the specific one actually lies too. Dropping down to the daily chart, it does look pretty bullish though. So again, if I go out to the live chart, let me see, I think I've got it, on my other page here. I'll bring it over. And we'll go to the ES weekly. And again, let me clean up my chart here for us since we're looking at live charts. There we go. And you can see that we're kicking off with a little bit of green, but not by much. And again, got to watch that weakness. So the overhead supply that I was talking about on the contract specific rather than the continuous is 42.77 to 43.61. But again, we also have to wait and see if we can actually make a higher high after the current higher lows that we already have. So higher high after a higher low would can constitute an uptrend. We do not have that yet. Okay, we have the higher low, but we haven't made higher highs. So we're still technically in a down or sideways trend. Anyway, that being said, let me move along here. And you can see the daily chart has made those changes last week. We made the higher lows and higher highs. Pretty much Monday we broke to a new high and just continued on for the week. And we're very bullish. Going down to the 4-hour chart, we may get a little bit of a stalling coming pretty soon, starting off on Monday morning maybe when the bell rings. You notice we're trying to make new highs, but we're doing it with a lot less momentum. That's not sustainable. So unless the momentum picks up Sunday evening going into Monday morning, expect some sort of retracement because we're also at our extension of 41.16. Now, it may just be a weak retracement. I'm not really sure how much we'll get out of this, but we'll just have to wait and see. Again, if I go back to the chart, go down to the daily time frame, one of the things we can do to kind of measure this is possibly look at, okay, here's our impulse that we're currently experiencing, and we can put in the retracement there, drop down to the 4-hour time frame, and now you have some possible targets. So if it's a very weak retracement, maybe we only pull back to 40.65 before we get a bounce. If it's a little stronger, obviously we've got other possible targets here along the way. Now you got to realize that the S&P is not really the leader telling us which way to go. Okay, even though, oh, by the way, I wanted to go down the 60-minute and show you that if we do get a retracement, 61.8 has a really good 60-minute demand zone. That would be a great buying opportunity that correlates with that 61.8% retracement. So right around 4,000, that'd be a really good buying place if we do get a deep retracement. Not sure if we will. We may only retrace to this 23.6 before we bounce, or even 38.2. There's a lot of buying pressure at 40.37. So this is what I was getting at. From the lows we just experienced in December 28th, we've been rallying a little bit from the end of the year, last year, to pretty much all this month. The NASDAQ has been leading us along with the Russell. So we want to look at the NASDAQ and see if it continues to push higher, it'll take the other markets with it. Now the S&P is not too bad off, but it's definitely not as strong as those first two. And of course the Dow is definitely lagging. So we're going to look to the leader to let us know when that market might turn back down. Well, looking at the NASDAQ, it too has not made the new high as of yet. So we're going to be keeping an eye out, 12,339, and the momentum here to see if we can actually break out and legitimately stay up there. So if we go to live chart, as I said, the markets are now open. Go out to the NASDAQ on the weekly time frame. You can see it still hasn't made that new high yet. Go down to the daily. It still has not made that high. But again, we'll look to see tomorrow morning, on Monday morning, if we get that strength. So we've got to break that high. We also are kind of pushing through supply zones that have already been tested. We have plenty of momentum to do it. So it looks as though this is a case of buy the dips because we're still rallying, and it's going to take the other markets with it. Obviously, earnings having a big play here. Also, on the 4-hour time frame for the NASDAQ, you see that same weakness. We made that target move, and we're getting some weakness in momentum, lower highs. That could give us a little bit of a pullback here before we go higher. On the Dow is the weakest index, so if we do pull back, this is going to suffer a little more. You notice we're not even making anywhere close to the prior highs, so I wouldn't be surprised if the NASDAQ falls. This will be one of the markets that falls very quickly with it to one of these retracement points. I mean, we're not even getting, trying to push a little higher in above 60, but not getting there. You can see we're dying off in momentum. Looking at the daily chart, same thing. We're losing a lot of momentum, just pretty much going sideways for a little bit. So I'm not looking to buy the Dow. If you're looking to buy anything, you basically need to buy the NASDAQ and some of the leaders there because they're stronger. And on the 4-hour, we finally worked our way through this zone. I don't have any new zones from last week. We bounced off that 4-hour demand zone. We finally pushed through after a couple tests of supply, but you can see that we're going to get slowed down again at 34,314 because you've got the NASDAQ that's dragging us up, but the weakness here on the Dow is trying to hold things down a little bit. Finally, with the Russell, this is really just moving sideways. We tested weekly supply. We have no momentum whatsoever. Pretty much it's going sideways. So even though it's trying to take over, and it might be. I mean, yeah, we have higher low, higher high starting right now. Let's see if it actually broke out this week already. So again, I go to the Russell, and I'll look at the continuous contract, and yes, we have. Look at that. So we have broken out. Sorry, that's the daily. I want to go to the weekly. Have almost broken out. Not quite yet. The high here is 1927.7. High here is 1927.2. So we did not break to a new high yet on the weekly chart. So still sideways on the weekly trend. Daily trend, however, we are bullish. You see the higher lows and higher highs at this point. So again, just this is not necessarily the leader. If you're looking to go long, you got better opportunities most likely with the NASDAQ and NASDAQ securities than you do on the Russell. Looking at the daily, as I said, it is trying to move higher. But we got to make sure we get some more momentum for that to continue to go higher. And on the 4-hour chart, pretty much the same picture. We got plenty of bullish momentum, but a little bit of divergence happening here, so we might get a little pullback before you continue to run to the upside, perhaps. Anyway, I'm going to shift gears here, and I want to introduce our special guest. This is somebody I actually met last year. I was working at a little, I guess it was a live trading event for some investors who were also interested in trading as well, and it was in Dallas of last year. And the person I'm going to introduce him to you is the CEO of Apex Trader Funding. His name is Darrell Martin. And basically, I met him, and it was kind of interesting because I know a lot of traders struggle sometimes with their funding where they don't have enough money to trade the way they want to trade. And there's this thing out there called proprietary trading firms. The problem is they're not all created equal. Okay, it becomes kind of a gray area at times where it's been treated as a little taboo because technically, when you trade other people's money, you're supposed to be licensed. And, well, there's these firms out there that exist that kind of bypass that. They skirt around it. But the majority of these were designed pretty much to almost have you fail, where you have to pass what's called a combine or prove that you know what you can trade. And a lot of these companies out there set the bar so high that it's very difficult to actually qualify for funding. So here you are paying month after month after month and never getting a bonus or benefit out of it, meaning you never actually get your hands on capital to trade. Well, Apex is a little different. They're created for traders by traders. They kind of saw what was happening in other places and said, "Listen, we need to change this. We want to change the game. We actually want to get people funded. We want them trading successfully." Now, wisely, of course, they don't want them losing a lot of money, especially because it's not theirs. But they want people to be able to trade using OPM, again, other people's money. So let's go ahead and take a look. And I met up with Darrell last week, and, well, I'll just shut up, and here's the interview. I'd like to welcome my guest, Darrell Martin, who is the CEO of Apex Trader Funding. I want to thank you for being here with me today. Appreciate it.
Thanks for having me on.
Absolutely. So basically, Apex Trader Funding, what is it? What can it do for people?
Basically, it's a funding company for people who are looking to get capital to trade with without risking their own money investing. So they're able to come in with it, whether they have a small account, no account, they're afraid of blowing an account, they don't want to lose their retirement. They want to get into futures trading, but they're scared, the leverage, all that fun stuff. Basically, if you're looking to make money in the markets and you don't want to risk your own money, this is the way to do it.
Yeah, I've always heard it's always great to use OPM, other people's money. I mean, this is kind of a no-brainer where you're committing your time, your knowledge, but not having to risk all your own personal capital, right?
Exactly. Yep.
That sounds great. So I know there's a lot of different firms out there. What sets you guys apart particularly? What's so special about Apex?
I'd say one is we are built by traders for traders. So we are actually traders. I have a trading education company, apexinvesting.com. That's been going for 15, 16 years. And so that, has sort of grown into this of seeing what people need, like they're learning how to do it or getting it down. And whether they use that company or any other company is perfectly fine with us, or whether you just do your own strategy. But so we built it like I tried out different funding companies. I even promoted a couple of those companies and really found that they just didn't add up and to what I wanted as a trader. And so I was like, I might as well make my own. And so I made it. We actually grew in the past year to be larger than any funding company out there, any futures trading funding company, with a ton of active subscribers right now. And we had 12,000 people passed our evaluations last month. And we make the evaluations very super simple, very easy to pass. And they only take 7 days. And basically, you just have to hit a certain amount of profit without hitting, a loss. And that's really
drawdown.
Yeah, without a drawdown. Yeah. And so if you don't hit that trailing drawdown, but you hit your take profit within 7 days, or if it takes you 50 days, it doesn't matter. Mm-hmm. Then you pass and you get funded. You get the first $25,000 of every account you have, and you're allowed to have up to 20 accounts. You get 100% of that first 25, and then you get 90% after that. So for life, of all the profits that you make on the account. If you blow the account up, then you just go back and take another evaluation.
Okay, right. So if you hit a certain drawdown, there's a limit, obviously, once you're funded, but then you just go back and have to just requalify on that particular account.
Exactly.
Great. Yep. And that's kind of nice. You mentioned it's only 7 days, where, I look at some of the other companies that are out there, it's 10 days and higher minimums that you have to meet. So obviously you guys are a little more lax in getting people into the funding. So it makes it a little bit easier and more relaxed for the trader. And you said they can use your education. They can use their own strategies or their own education, whatever they want. It's a matter of just getting people to use the extra leverage that they may not have available to them to be able to get the returns they want. Sounds great.
Exactly. We do 2 payouts a month. We're paying out pretty much every day of the month. The official payout days are like the 1st and the 15th. But we're actually paying out constantly throughout the month. We have a payouts page at the bottom of our website. You can see just every payout we do. So we're very transparent. I think this month alone, we paid over 1.3 million out. So been a great month so far. And, we were doing about 500,000 a month last year. So we've already doubled that. And we're looking to double that and double that again, So the whole goal being to, help fund traders and find good traders out there. And then we make money off their trading.
Right. And what asset classes are they able to trade with you?
They're able to trade futures, which sounds really foreign to a lot of people out there, but it's just like indices, like the Nasdaq, the Dow, the S&P, the Russell. They can trade gold and oil. They can trade FX instruments like euro dollar, pound dollar, Aussie dollar. They can even trade stuff like cattle and hogs and heating oil and natural gas, and so there's bond markets. So there's really something for everybody out there. And like I said, we have education if you don't know what that is, but it works the same as everything else. You buy low, you sell high, or you sell high and buy low.
Sure.
And it all moves the same.
Yeah, my workshop here in the Wendell Effect, I usually go through a bunch of different the futures markets and my
That's
ideas
awesome.
of what's going to happen for the week. So it's right in line with what you guys do. I'm pretty much promoting those markets and showing people what's available in those markets throughout the week.
Yeah, so your subscribers are very fortunate because a lot of them come in not knowing, how the markets work and how the charts work and what the instruments are and everything else. And so the fact that you're going through that with your subscribers is fantastic.
Absolutely. And this, like I said, gives them another avenue, even if they are trading for themselves, if they want to leverage and grow what they're doing without additional risk to them personally, being it's basically just a subscription cost. And now they're able to leverage more. That's pretty amazing. Yeah.
And they can do up to 20 accounts. So they
Up to
can
20,
really,
right.
they can make like $500 and make that times 20 accounts. You just make 10 grand. Yeah.
Absolutely. As far as the hours for trading, are you able to do any overnight positions, or is it strictly day trading to minimize risk? How does that work?
It's day trading, but day trading encompasses 6 p.m. Eastern time to 5 p.m. the next day Eastern time. So it's 23 hours a day.
Hold over the rollover period.
Yeah. So, I mean, you close it before 5 o'clock and you can reopen at 6. So, I mean, there's usually not something that happens between that hour, but every once in a while there's a big gap. And that's why we have you close it, because it can be very dangerous if some like Fed news comes out during that time and or some earnings comes out then or something like that.
Right. So over the weekend, of course, you have to be closed too for the unknown.
Exactly. But you can open right back up on Sunday at 6. So,
okay. Yeah.
So we let you trade basically 23 hours a day, 5 days a week. Yeah.
Sure. Well, thank you for being here. Is there anything else you'd like to mention before you leave?
I'd say, stick with somebody like, Wendell Effect here, who's helping you out. It's good to stay consistent, not hop between different companies and all that stuff. And ask for tips and tricks. Trade small, trade slow. Work your way up there, and be careful about a lot of other there's a lot of prop firms out there, and they have a lot of little hidden rules and fine print, and we put it out there up front. So we keep it simple, and we are looking to fund as many and pay out as much as possible.
Yeah, I mean, like as you said, it's for traders by traders. So you kind of been there, done that, saw what you liked, what you didn't like, and created a new entity that has the best of what you've seen in the markets, and really does look like it's something that's great for many, many people who are out there. Many people are restricted in what they can trade based on their account size, and now you're opening them up to new opportunities and new income levels potentially without the major risk. Yeah. So it's
I mean, we get letters all the time about how we're changing people's lives. It's pretty awesome.
That is awesome. Well, I want to thank you very much for your time here. If anybody has any questions, I'll go ahead and put the link available for the Apex Trader Funding on the website here and in the comments below. So they'll be able to get a hold of you and the company, and hopefully sign up and try out the evaluation. As you said, it can qualify in as little as 7 days up to however long they need. And there's resets available if things happen to go awry. So you can go ahead and do that just for a small fee. And then get qualified and use OPM, other people's money, to make your life better.
There you go.
Right, well, thank you very much for being here. Appreciate it.
Hey, thanks for inviting me on.
Absolutely. Okay, welcome back. Well, I hope you enjoyed that with my little talk with Darrell. And if you have some more questions, you can see I've actually got my logo, or not my logo, my affiliate tag right here. That's the HTTPS apextraderfunding.com/member/AFF/go/trader/BW@?I=1. And actually, you can also hit me up on my email address, which is brandonwendell.cmt@gmail.com, and I can give you a code. They're actually running a little special going on right now, 50% off. Basically, what they're doing right now is a 50% discount, again, off your evaluations and the reoccurring billing. And that's going to be good till the end of February. So if you're interested in taking advantage of that, you can use the code right here. Here's my 50% off code, WLBDRBVY. I don't know if that one kind of made up. They made it up for me, so I didn't pick it. And Anyway, so you can use the link that's here, and I'll put it in the chat below as well, or comments below, but also the 50% off code. Basically, what happens is if you sign up for an evaluation, you get 50% off the monthly fee for that evaluation, whatever it is that you choose, and every reoccurring billing will also be 50% off. So it's a long-term type of prospect for you as well. So if you're interested in learning more about the prop firm trading and want to take a chance with Apex Trader Funding, by all means, there you go. There's an opportunity for you to do it at a lower cost. So let's get back into our analysis of the markets. We're going to go ahead and take a look at the weekly market analysis for the energy markets, starting off with crude oil. And you can see that going into January, we're not really bullish, we're not really bearish. I mean, it suggests a little bit of a drop for the average return of negative 1.5%. But really, the winners versus losers over the last 15 years have been kind of split. Looking at the chart, you can see we're really not going anywhere in the weekly chart of crude oil, just kind of sideways. So not expecting a lot of big moves other than intraday trading opportunities. Looking at the daily chart, pretty much the same thing. We're stuck in this range. Now we are near the top of the range, but that would suggest that we may actually drift down to the bottom of the range. So going from that 83 down to 73, that $10 drop is something that's possible for the next, well, maybe not the next week, but maybe we start to drift a little bit lower. It could happen that we go in a couple days like we've done before, but it does look like we're going to be stuck either sideways or a little bit bearish this week. Looking at the 4-hour chart, pretty much the same picture. I mean, you see we just went sideways. We've got strength and weakness. Overall, though, it looks like we might break down a little bit, at least to test the $76 level first before we get any kind of meaningful bounce. Looking at nat gas is bearish almost 70% of the time. From January 29th to February 11th, you see that this historical move is down over the last 15 years. Average rate of return is negative 5.56%. We've been in a big downtrend on the weekly chart, almost down to repeat the previous impulse. We didn't quite do it yet, but we almost have. So it looks like we got more downward pressure, very, very strong. Really can't fight that. Looking at the daily chart, pretty much same thing. Any kind of rallies are met with a lot of selling pressure. It looks like we're going to continue what we did last week with lots of selling. 4-hour chart, there may be some entry opportunities at 2.946 to 3.012. We have drop-based drop, letting you in to short to target those lower areas perhaps. Moving on to gasoline, it looks as though there's 73% of the time we actually rallied, but not very much. 0.5%. So don't get too excited about a rally. The real big rally comes in mid-February, as you can see. That's where the big rally ends up. So in the meantime, we're likely to see a little bit of a push up. We're almost back to a bullish trend, as a matter of fact. We made higher low. We haven't made the higher high yet. And we still are failing to get above 60. So there is still a little bit of weakness on gasoline. We could pull back before we go higher. Looking at the daily chart, this does look a lot more bullish, but again, we've had impulse, correction. We duplicated the impulse. We're getting a little correction before we make our next impulse up to 3.04 this week. So I don't know if we'll get there this week, honestly. We should pull back maybe a little more. Look for some intraday buying opportunities. You know, if we drop down the 4-hour chart, you see we do have a nice demand right here. 2.5 looks pretty good for a buying opportunity. Good buying pressure that came out of that. Just keep an eye out on what's going here with your momentum. But if we can buy the 2.5, oops, backwards, there we go. Our next target, if we do buy around 2.50, is somewhere up at 3.5. Or sorry, not 3.5, 3.04. So we could get a pretty good rally going on for the next month. But we got that little pullback and the buy opportunity first. So we'll keep an eye out for that on gasoline. Moving on to heating oil. In the last 3 years, unfortunately this doesn't let me go further, but in the last 3 years, this has always gone up from the 29th until the 11th of February, up almost 4%, 3.75%. Big swoop to the upside expected. Looking at the chart, we are on a nice uptrend still. Obviously, last week we had a red candle, but it looks like we're ready to return back to the buying pressure, but we need the momentum to get above 60 to really sustain that. Otherwise, it's just going to be very choppy like we've had. Looking at the daily chart, you see we're on a little pullback back to this origin of buying pressure. This is not really a great demand area, but maybe not bad. Rally, base, rally, about 3.2. And we do have bullish momentum here. I don't see us coming down and making new lows. So if we're going to bounce, we got to do it pretty quickly on Sunday going into Monday, or it's not going to happen. Looking at the 4-hour chart, we are in the demand. And there's even that one below it too, drop base rally before you get to the rally base rally. So lots of buying pressure. The only issue is because we were starting to move back up, potentially from below 40 on the RSI, we will stall out at about 3.28 to 3.32 and pull back before we go higher. So we're going to have trouble breaking that high before a pullback and then going up. Also, keep an eye out right here. This is good selling pressure at 3.4. So we may stall out in that area as well. And that is about it. Actually, I'm not going to get into stocks. All I'm going to do is cut it off here for the futures. We'll do the stocks later this week with a new video. So hopefully you enjoyed this. And if you could, please let me know what you thought of it. Let me go ahead and get to the email address, if I can skip over to that one. Forgot to put that up for the slides. I have put that up for you guys before. And let me see here. Oops. So bring this back to where it was. There we are. So, as I said, please make sure you contact me if you got any questions. brandonwendell.cmt@gmail.com. Go ahead and hit like and subscribe, so you can, and also the alert so you know when the new video is coming out. And you can hit me up at Trader B-Dub on Twitter to follow me on a regular basis. So until next time, everybody, trade safe, trade well, and take care.